Some economic data out this week is said to paint a picture of how South Africa's economy has been recovering. New vehicle sales numbers for April, as well as a survey on manufacturing conditions, are set to come out. And eNCA business anchor Rofhiwa Madzena will be tracking all of this throughout the week. Rofhiwa is joining us live now from our newsroom here in Johannesburg. And Ro, let's start with the manufacturing data. What exactly are we expecting to see?
Well, there have been some significant improvements, Thembekile, in the manufacturing industry. And this, of course, relates to the fact the economy has been opened up after the hard lockdown. But there still are some issues around the load shedding, that a power supply that's not sustainable. That's having an impact on manufacturers. Another thing that we also seeing in terms of the industry is the exporting market here, is that countries around the world have locked down their countries to protect themselves from the spread of COVID-19, and that of course has had an impact on the manufacturing industry locally. But it has opened up an opportunity for localization and for local business to sell to South Africans and for South Africans to support local business. But what we're going to see is that from February to March there was an improvement, and we might start to see something similar in the month of April. And given what we're going to be seeing in terms of COVID-19, the new variant, and of course the vaccine rollout, which is ever so important, we're going to see a positive trend which will contribute to overall economic growth.
Speak to us about the vehicle sales. How's the industry been faring when everyone else is saying they're selling less of their products?
Well, interestingly, Thembekile, what we did see earlier on in the year or towards the later part of last year is that people domestically weren't buying cars at all. In fact, a lot of people who were retrenched or who had their salaries cut down were not spending on big ticket items like cars. What we have seen, though, in the last 2 months is that there's been an uptick. I think they are expecting the vehicle data that will be coming through tomorrow evening to show about a 30% improvement in domestic vehicle sales. And as the previous governor of the Reserve Bank, Jill Marcus, once said, it is an indicator of the health of the consumer and the health of the economy. So what you're going to be seeing is that more and more consumers were purchasing cars in the previous period. What you're also going to see is that the export market for vehicles is really ramping up. South Africa relies a lot on the exporting on automotive parts and completed cars to European countries and the like, and that has also started to ramp up significantly despite COVID-19.
Let's end with company news as well. MTN is going to release its first quarter results this week.
That's right. One of the continent's biggest mobile network operator releasing their first quarter results, and it's going to look good, Thembekile. So the story is going to be similar to what we've seen over the last few weeks in terms of everybody working and studying from home and needing to use mobile devices, laptops, and data to get their work or school studies done. And that's going to be reflecting in MTN's results, as it has with others like Vodacom and so. Another important thing to note here is their business in Nigeria. That's growing by double-digit growth, and this is despite issues around the issuing of SIM cards and other legal battles that MTN has been embroiled in that particular market. That's one of the biggest markets that MTN has, and it's starting to bear fruit for them in terms of that double-digit growth and people relying more and more on data and being able to access it at a cheap price. And we do know here in South Africa, we've seen Vodacom as well as MTN reducing the price of data, and that's obviously starting to filter through in terms of the earnings that they'll begin to see.
eNCA business anchor Rofhiwa Madzena, thank you for that, Ro.